Horatio, so I was wondering if you had advice for us traders that have full-time jobs, especially during the main trading hours. It happens to me often. I enter a trade based on fundamental analysis and the daily shift on sentiment. My stop loss are triggered and that screws with my psychology. How can I use the terminal most efficient? How far out does it make sense to set your stop losses? And what would be the best way not to let daily sentiment shifts affect my psychology? What I would be doing is, so this is one of my trade calls from yesterday, and this was largely based on scenarios such as yours, where essentially what you're saying, I believe, is so because you are you've got a full-time job, obviously you can't afford to really, or you don't have the opportunity to really trade that immediate short-term sentiment. So just take a look out for reports like this. Yesterday, this was a New Zealand dollar Swiss trade. And what you'll notice is the big focus here was we were looking at those historic levels. So just quickly, you can find this under April 2nd, and it was just the first post on that day, a short New Zealand dollar Swiss. And ultimately, the main reason for this trade is because what we had noticed is the market bias was still very clearly risk off. We know that's the case because the number of viruses, that spread of the virus is still increasing. And we know that pairs such as New Zealand dollar Swiss have retraced quite a bit because that market sell-off subsided, but we've met a real key level of resistance just at that 58 handle. And you'll notice our stop was just above 58, and where we entered was on 57 to 75 to that 58 handle. And what we were looking at here is, we'll just stick with this chart. So the focus here was the fact that what we've been seeing is, so we had that massive sell-off in mid-March, and then the sell-off kind of, subsided. And we saw that retrieve. Again, it's only marginal compared to the big scope of things, but what we were seeing is the market begin to move sideways. And this isn't just New Zealand dollar Swiss, this is most of your high beta / safe haven currency pairs. But we were consistently hitting resistance just around that 58 handle. So in this kind of environment, we know that we're continuing to see a shift from risk on to risk off. The market's a little bit tentative at present, and we know that we've got a key level of resistance at this level. And we know at present, until we see that material change, it's unlikely we are going to see a big break higher above this level, because ultimately nothing's changed. So I'd be looking for scenarios like this, right, where you can continue to look. You've got a key level of resistance over a considerable period of time. So this isn't a day trade. We know we're looking at a medium-term based trade, which you can get in and hold with a high level of conviction. At the same time, you can then you can look at playing the lower bound like we did. We had a target at 0.57. And that was a reasonable target, but if you wanted to, you could be a bit more ambitious and you could look at the lower swing lows as well. But ultimately, that's what you're looking for. Again, we are trying to post these trade ideas when they come to us, so keep an eye for ideas in the feed. But ultimately, what you're looking for is you're looking at trading with that medium-term outlook. Again, that medium-term outlook at present is the market is still very much leaning risk off because the spread of the virus is continuing to do so at an increasing rate. And we've got a timeline, which is we expect that to be the case until the virus peaks. And we know we expect the virus to peak potentially at some point, probably more towards the later end of April. So we've got a timeline, we've got a clear medium-term bias, and we're looking at pairs like New Zealand dollar Swiss, where we have a very significant level of resistance, which we can consistently see the market isn't breaking above. At the same time, we've got a decent range, so we know where we can look to enter. So that's pretty much what I'd be doing. I'd be making sure you're looking at pairs where you've got that really clear medium-term bias, you've got a very clear stop loss location, and ideally, very clear targets as well. Again, in this scenario, you can be a bit more ambitious with those swing lows targets if you wish, but hopefully, you know, you can get a good idea of what kind of approach I'm suggesting you take here. And that's what I'd recommend doing. You don't want to be looking at day trades because the sentiment is literally shifting from one session to the next. So it's not just a case of it's changing one day to the next. It's literally, as we go from European session to US session to US session to Asia Pacific session, we're seeing sometimes drastic changes in that risk tone, and we're getting developments come out all the time. So you really want to take, if you can't be there at the beginning of every session, you want to be focused more on those medium-term based trades. And at present, the market environment is ideal for such trades because we know that we've got that really clear medium-term bias. We know we've got a clear timeline. We know we've got a very clear reason, again, the spread of the virus. So it's kind of ideal to just look for those deep retracements into key levels of support resistance, look at entering at those levels where you can have a high conviction stop loss and a very clear profit target.